Complexity and perfection are twin enemies of execution. My friends, we just keep it simple. We don't have to be perfect. We darn sure aren't going to make it complex. If you do what we teach on how to minimize your losses, how to cut those losses, how to use your profit and loss bands, and of course my favorite little tool here under prediction and measurement tools is the long position and the short position. We show you in those trainings. In fact, I'll put one of them at the end of today's video so you learn how to use the average true range that we put here on our chart on the 2-day chart so that when we do follow a weekly trend, we are again obeying the rules, minimizing the losses, maximizing the gains. Let's jump into these charts. Of course, it's crazy. I love volatility. I love craziness. I don't jump on board with it. I just follow the trends. And another reason we love our Heikin-Ashi candlesticks, you haven't taken that training I put out over the weekend, it'll be at the end of today's video. I really want you to take it. I worked hard on it to get it out on the Heikin-Ashi candlesticks on Sunday. It's how I spent a large part of my Sunday doing this for you guys for free. So please make use of it. And of course, Patreon members, thank you so much for your support, underwriting the cost of the channel. If you appreciate what we do, support us. How did the markets end up after all the roiling back and forth for the day? Well, the S&P ended up down a little bit, 0.14%. Now, of course, this is going into the fourth week. We talked about the 30-period EMA. Well, we have pushed through it now. That is good to see. We're either going to bounce off or push through. Either way, we don't care. We just want it to go in a direction that we can chart and have been charting, and it is still going in that direction. Not a big down day, but the candle is showing the average pace heading down. We can see a spike in the volume on the 2-day chart and on the half-day chart. Again, at the end of the day, some indecision, but we can see where we had 2 days of strong down movement starting on the afternoon on Thursday, Friday morning, Friday afternoon, and Monday morning, slowing down a little bit Monday afternoon. So again, moving as we would expect, had that spike last week with that spinning top, and again, pushing through and heading down. It was a little iffy, but again, when the bank started going down, the bank on Friday, and all of those ripples, what did it do? Well, of course, pushing through. Now, here's one a little more curious. We go to the Qs. We had down move, then 2 spinning tops, almost really dojis there, and we just see the weekly candle pushing through the 30 EMA, exponential moving average. Now, what do we see? Well, we see volume increasing with a red down candle on this latest 2-day candle after a spinning top before. And we can see where things were down in the morning. Again, lots of indecision there. But again, in the afternoon, pulling up some. So it ended up 0.74%. But overall, as we look at the weekly and the 2-day, we can see downward pressure there with increasing volume. So again, we'll watch, wait and see as things continue. And we'll, just again, how does this continue throughout the course of the week with these roiling markets? We'll just continue to watch, wait and see. What about 20-year bonds? Now, 20-year bonds had been moving down. That came to an end. I closed my position after success during this downward period. And when things really spiked up on Friday, I pulled the plug on the other half of my trade there. And of course, what are we doing now? Well, it's turned in the opposite direction and heading up, which is fine. We saw the volume spiking up, particularly on Friday, going from what had been somewhat of a lackadaisical candle to that up move, and then spiking up on Monday and up for the day again after all the spiking back and forth, just 0.23%. But our Heikin-Ashi candlesticks are put together in a way that helps us see the average pace and not the confusion from all the volatility. And if you'll take that training that we put out yesterday, that's on Sunday, I'm recording this on Monday, the 13th, you will understand a lot better how Heikin-Ashi candlesticks are put together and how to use them, along with that volume training we put out the prior Sunday. Helps pull it all together for you. I'm doing one more for you. That's going to be on how to use the trend lines, which is, again, the third key in the vault. I mean, again, if you can understand volume, if you can understand Heikin-Ashi candlesticks, and if you can understand trend lines, you're well on your way to seeing success. And you can prove it to yourself with your successful practice trades. So, starting the week off, up 0.23%. Not super strong, but the candles are going in the right direction and the volume is there. Only thing, we're paying close attention to is that dying of the volume in the afternoon. Well, not dying of the volume, dying in the price movement in that red spinning top in the afternoon. But again, on our bigger charts, still looking good. Now, gold. What would gold be expected to do when banks are potentially having problems? Well, we saw on Friday as things spiked up, went to the green, and of course followed on. And this is actually showing price movement up 2.29%. You don't see a doji at the end of the day here. You see where things are pushing right up on it. And again, we saw things take off on Monday after moving up 2% or so on Friday, followed with that big up move in gold. It's beautiful to see. I love gold, and I love it going in the right direction as our weekly chart is showing us, just connecting those two, up 2.29%. Now, here's the big gainer for the day, but it's weird how this is played out. Up to 22.27% XBTF. Spiked up in the morning, a little bit less or about the same in the afternoon. And again, pushing through the prior trend line. We have a small green candle there. You can see where all the down move was. Ended up on this 2-day candle that represented Friday and Monday. Ended up turning that from a red down candle into a spinning top, almost a doji. Lots of up movement for the day, taking us back to, about where we were back on, I guess, that prior week of beginning the 27th of February. So again, in one day, spiking up quite strong. What are we really waiting for here? I mean, did you know that was coming? Was that something you could have planned for? Well, maybe on Friday you would have hoped, but it would have been a lot of gambling. And again, that's what we keep seeing here with Bitcoin, that is not giving us really clear signals on anything it is doing. It has gone from a few days of red down candles and red down volume to a spike day of up volume. But my friends, that doesn't make for a chart that you can really track and follow. And that's what we're looking for. We're not talking about throwing money on a card table or at a roulette toss of the little ball there, hoping it lands on our number. That is gambling. And what I'm hoping to see as we move forward is for these charts to straighten themselves out and to give us nice waves of movement. That's what we want to see. Red to green, green to red. We want things to be chartable so that it's easy to jump in and ride a wave up, jump out, ride a wave down, jump in, ride a wave up. We need that kind of movement that we can track, that we can see, and that we can profit from in our practice trades. We're not going to be gambling. But you guys asked me, a couple of years ago to start tracking Bitcoin. I've done it. We did have a spate there for a while where we could track it and practice trade it, but that's not happened for quite a while. So we'll continue to wait. We'll continue to follow it. We'll continue to hope. And hopefully in the not too distant future, we'll be able to track it, and we'll see. Maybe this spike over the course of the day is going to continue, and we'll set up some parameters where we can find a decent jumping in point that's going to move in the right direction. That is where we are. We love to hear from you. Please take those trainings, and we love to always get your feedback. cw@chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.